All right, well, good evening, everyone. Welcome to tonight's webinar, How to Invest in the Stock Market Profitably, an introduction to the Stockscores approach to investing. My name is Tyler Ballhorn. I'm the founder of Stockscores.com. I have been a professional trader for 33 years. I've been teaching people how to trade and invest in the stock market for 23 years. And tonight we're going to focus on investing, on the longer term style of trading. On Thursday, we'll focus more on day and swing trading, which is the short term variety. So this is really for those who don't want to dedicate a lot of time to the market, maybe want to manage their retirement savings better. If you can add 1 or 2% annual return to your retirement savings, it has a huge difference over the course of your investing career, I guess. For someone managing their retirement savings, that little difference when it compounds can make the difference of hundreds of thousands of dollars over time. So what I'm here to show you tonight is my tools, my approach. I'll go over my strategies, and then at the end, we'll actually do some market scans in search of opportunity. The market for investing has been fairly quiet as the market has been trending down since January, but it started to show stability in the last couple of weeks. And I've really noticed charts starting to improve. There's sectors of the market that are doing well. And of course, typically at this time of year, from sort of October until May, is traditionally the strongest time of the year for the market. And it's sort of showing that cycle again. We've definitely seen an improvement in the action in the last, I would say, 3 weeks. And that's sort of right on schedule. So if you're interested in learning and if you're sitting in some cash, I think it's a good time to start looking for opportunity. I'm going to try to teach you a little bit about what I do from an investment standpoint tonight. And then again on Thursday, we will visit the more of the short-term trading for those of you that have an interest in maybe making a career out of stock trading. We'll touch on that on Thursday. Of course, you can register for all of these events Thursday, and then there's another event on Saturday. They're all free, and you can register for those at stockscores.com on the homepage. Just go down the page, and you can see the upcoming events. All right, so the itinerary for tonight is I'm going to give you a little overview of how I got started in trading and how I developed my approach. Kind of an interesting story. I'll tell you what I focus on when I am looking for longer term trades or investments in the stock market. We'll describe how long it takes to apply my approach. At the start here, for those that were here a little bit early, I put up a poll that showed the time of day that people tend to do their research, and most people do it during the day, but some in the evening, a little bit on the weekends. Well, I'm actually going to go through, how much time does it actually take to do this, to manage your own money? Is it hours and hours, or is it minutes and minutes? And I'll describe that for the different strategies that I've developed and teach others. We'll talk about my investor strategies. So I'll describe a number of them. I'll show the tools that I use to identify opportunities, huge time-saving tools, instead of what I used to do, which was spend hours and hours of time researching the market. I can now go through the entire stock market in less than 10 minutes. And we'll do that tonight at the end of the presentation. We're going to do a market scan, a real, live scan, and try to find some stocks that are worth considering in the days ahead here. I will also give you a little tour of the Stockscores Education Center, which is my online resource for learning my approach. And as I said at the end, we will search for opportunities. All right, so let's get right into it. And we will start off with the theory. Whoops, I wanted to talk about how I got started in trading. So way back when I was a student at the University of Calgary, this was a long time ago, I'm 52 now, so that was over 30 years ago, I decided, first of all, I loved the stock market, and I decided to reverse engineer the stock market. I was in business school and they were teaching me, you buy companies with good fundamentals and look at their earnings and all of the traditional things. And I did that for a little while, and it didn't really work very well for me. And I wanted to, really beat the market. I wanted to find those stocks that went up 30% in a week, not 8% in a year. And so I took sort of to me, what was common sense is I looked at the stocks that had done well, and I tried to figure out what their characteristics were early in the process. And so I can remember this a long time ago, before really the internet existed in the way that it does today. You couldn't just go to a website and pull up hot stocks. I had some early stock market analysis software, and I would download data for each stock that had done well, print out the charts. Sometimes I would go to the business school library, and they had these books of stock charts, and I would look through those. And I kind of taught myself how to read stock charts. I don't really consider myself a technical analyst, in the sense that I don't really use a lot of indicators. I just have taught myself how to read chart patterns. And there are things that happen in the market almost always before a stock does really well. And those are some of the things that we sort of touched on in Saturday's webinar, this recent Saturday. And we're going to sort of build on those things. If you missed Saturday's webinar, you can watch it. It's on YouTube. Just go to YouTube and do a search for Stockscores. Find the Stockscores channel, and there you can see my recent videos. And the one from Saturday is all about how to find stocks and avoid big losses. And I think you'll find that useful. If you haven't watched it, I would recommend you watch it, because a lot of the things that I talk about tonight sort of leverage a lot of those concepts. Okay. So at about the same time I was doing this sort of reverse engineering process, I was also in a class in university in finance school, business school, where we looked at the mergers and acquisitions that were going on in the market back in the 80s, and mostly in the 80s. And so we looked at all of the stocks that had been bought out. So, what would happen is one company would buy another. So Nabisco bought RJ Reynolds, or maybe it was the other way around. Anyway, there was a merger between Nabisco and RJ Reynolds. And, when one company wants to buy another, typically the stock being bought goes up a lot in value. If you're buying a company, you have to pay more than what it's trading at in the market. And so it would be great to know if a company was going to buy another. And our purpose in this class was to try and figure out if the market knew about these big mergers, big buyout deals, before they were announced. And what we found is that in almost every case, the stocks that were being bought almost always traded abnormally before the announcement of the merger. So if company A was buying company B, and let's say company B had been trading at $10, and company A put in a bid to pay $15 for the stock, obviously when that news release came out, the stock would go from $10 to $15 almost instantly, because that's the price that the company was being bought for. And there's still buyouts. There's almost a buyout every day in the stock market. Well, if you knew about those deals before the announcement, obviously you could buy the stock before the announcement and then, benefit from the big jump in price when the deal was announced. And I'll show you an example of that tonight that I'm sure you're all familiar with. That'll be one of the things that we touch on this evening. And anyway, in this class, we found that most of these big buyout deals had abnormal trading activity before the deal was announced. And that became the basis of my approach to the market. I realized that abnormal activity in the market was a clue, not only that a stock might be bought out, but also that there was, positive change in fundamentals, and that, there was a way to use trading activity to predict the market. So one of the things we'll focus on tonight is the tool that I developed to do that. In the market, if you're going to beat the market, you have to have an edge. My edge is that I developed my own indicators. I don't use what other people use. And I developed my own tools. And those indicators and tools and the knowledge that goes with them is something I make available to a relatively small number of people every year when I teach a course. And the tools I show you are part of learning my approach. And the great thing about it is that I don't distribute them widely. I don't really want a lot of people using them. I sell enough of them a year to sort of pay for the business, and it gives me good cash flow so I don't have to pull money out of the market. And that's it. Teach 100 people a year. That's all I really try to do, and make those indicators available to that small number of people. I've been doing that for over 20 years. And, the number of people that I've taught is a relatively small number. And we have this little club that uses these tools and can benefit from the edge that I found a long, long time ago. One of the things we'll talk about tonight is how that tool works and what is the edge. All right. So the theory behind my approach has a number of stages. And the first thing we're trying to do is to find market beating stocks. All right. I'm not interested in doing what the market does in terms of return. So, the stock market tends to return about 8% a year. I want to beat that. If I can earn 20% a year, obviously I'm beating the market quite handily. And that's my goal, is to beat the market. If the market goes down like it has in 2022, market's down 25% this year. If you're up 3%, you're dramatically beating the market. And so that's always my goal, is to beat the market. Well, in order to beat the market, you have to find a type of stock that I call an alpha stock. Alpha stocks are not really correlated to the market the way most stocks are. Most stocks will kind of go up and down with the market. So if the market goes down 25%, then most stocks will be down. A conservative stock might be down 20%, an aggressive stock might be down 40%. And certainly we've seen stocks in the last year that have gone down 70, 80%. And they're correlated to the market in different degrees. Well, alpha stocks are stocks that are trading on their own story. They're able to go up when the market goes down. When the market goes up, they can go up even faster. And they do so because they have something happening in their business that really captures investor excitement. Now, I'm going to show you examples tonight, and almost all the examples are alpha stocks. They're stocks that are beating the overall market because they have something fundamentally strong that allows them to outperform. All right, and that's my aim. I don't want to, if I was just happy to earn the market's return, then there's no effort required in that. You just buy an index mutual fund or an index ETF, a low-cost index ETF, and you're going to earn what the market earns. And historically, that's pretty good, 8% a year, which means in 7 or 8 years, you double your money. Not bad. But I want to double my money in 2 or 3 years. And so to do that, I have to obviously take a different approach. And that's what tonight is introducing you to, is what is that approach. So let's take a look at some examples of alpha stocks. So this is Baytex Energy, and this is going back to 2019. But if you look in 2022 here, Baytex started the year at $4, and now it's it's getting up towards $8. At one time, it hit $9 this year. So that is an alpha stock. It dramatically outperformed the overall market, and that's because it has fundamentals that are better than the market in general. So that's one example. That's the only example I have. We'll come back to more. I've got lots more examples coming. So what we're trying to do is find these alpha stocks, and they leave clues. There are signs in this chart that told us it was good to buy here or to here or here or here. And there's different strategies that I'll expose you to tonight that establish those buy points. You'll also see that there is this squiggly line at the bottom. It's called the Stockscores indicators. And we look for where this line is for longer term trades. And when that line, when the green line is above 60, so you can see 60s right here. When the green line is above 60, the buyers are in control of the stock. You can see there was a period here when the green line went below 60, and you can also see during that period of about 2 months, stock didn't do very well. And so these indicators are helpful to, know when to stay clear of a stock. And there again, 2 or 3 months of downward trend and the line was down. And then it gets back above 60 and stays above 60 for 6 months. And during those 6 months, the stock moved up quite nicely. So those are the Stockscores indicators. I'll show you how we use those a little bit later and where you get them. And you can get the Stockscores for any stock traded in North America from my website, stockscores.com. You just punch in the symbol and it'll show you the scores, and it'll also show you the historical stock score. Now, most stocks in the last year have had a sentiment stock score less than 60 because most stocks in the last year have been going down. And so it's a really simple, easy way to put stocks into 2 piles, worth considering and not worth considering. And if it's in the worth considering pile, then we do some other things to determine the right time to be a buyer and do a little more work on it. All right, so that's the first thing we're trying to do is find alpha stocks, market beating stocks. Now, why do stocks move in strong trends? They do so because their fundamentals are better than the general market or in the sector. Even though I look at stock charts, I fully recognize that it is the business of the company that drives the market. And so you won't hear me talk about fundamentals really, but essentially what I'm doing when I look at a chart is I'm looking at the market's understanding of the fundamentals. When we look at Baytex, the reason it's going up is because people like the fundamentals and they were willing to pay more for the stock over time. And I don't need to know anything about the company. I don't need to know what industry they're in, who their management is, what their debt levels are, because all available information, everything that the world knows about any one company, shows up in this price action. And so when a large institutional investor does a lot of research on Baytex, for example, and they think it's worth buying, they go into the market and buy it, and they create the abnormal activity that I follow. They create the abnormal volume. They create the abnormal price action. They break it out through resistance, from optimism, from low volatility. These are the things that we talked about in Saturday's webinar. And again, you can see that webinar on the Stockscores YouTube channel. It's all free, so go back and take a look at that if you haven't watched it. But it's the fundamentals that paint the picture. It's really the fundamentals that drive what investors are willing to pay for a company. And when we look at a price chart, we're looking at the result of the argument that goes on in the stock market every day. And that's, if you want to beat the market, that's what you need to be able to understand is not what you think the fundamentals are worth, because you're one person. It's what the market thinks the fundamentals are worth. And in that realm, there's millions of people in the stock market. And there's some people that get better information than others. And that's where I come into the next point here, is that the stock market is not fair. If you think the stock market is fair, as the saying goes, you've got another thing coming. The stock market, I wouldn't say it's fixed, but there are people in the stock market that get better information than others. Within every company, there are people that get better information than others. And so within Baytex, for example, there are people that get better information than others. Every company has better people, more well-informed. And when those people have better information, they act in the market and they create the abnormal activity that I look for. They create the patterns that I look for. Going back to how I started in the market, I went through hundreds of stock charts for, companies that had done really well, the market beating stocks. And you see that these patterns occur over and over and over again. And I spent thousands of hours, 30 years, learning what these patterns are. And now I can look at a chart and instantly know if it's worth buying or not in 2 seconds. And it's not that hard. I can teach anyone to do that. But, I think sometimes people feel a little funny when I say, within 2 seconds, I say, don't touch this stock. And they're like, well, how do you know? You didn't look at the fundamentals. You didn't read the news releases. You don't know who the management is. Hey, you're right. But the market does. All of that information is in the stock chart. All I look at is what the market thinks of the information, and that's what shows up in the chart. All right, so here's another example of an alpha stock. And you can see here that there are times when the stock outperforms. So it's, obviously here, and there's times when it underperforms. And you can see that when it's going up like this, the sentiment stock scores were above 60, and then it fell down below 60 right about in here and stayed below 60 until maybe 6 months ago. So here it was below 60, it went down. Here it was above 60, it went up. And then more recently, we've been back above 60 again, and the stock's been doing well. Now, you cannot simply use the stock scores to manage your portfolio. They're a big help. They're a tool, but there's a little more to it than that. But obviously, it's a nice way to put stocks into those two piles, stocks worth considering and stocks best avoided. Now, I said the stock market is not fair, and I told you that there's always someone that knows these buyouts and mergers are coming. There's always somebody that knows when a company's fundamentals are getting better. And here's a prime example, Twitter. Now, you've all heard of Twitter. It's been in the news a lot. Elon Musk bought the company, finally closed the deal last week. And this is the day that the deal was announced. That is the day that it was announced that Elon Musk wanted to buy Twitter for $54.20 per share. This is the day that the market told us something was going on, because that's the day that a downward trend line was broken from a rising bottom with abnormal trading activity. The volume was abnormal that day. There was a rumor out there in the market that something was going on. I didn't know anything about what was going on, but I saw the stock behave abnormally that day. I knew from the market activity that something was going on. I had no idea Elon Musk wanted to buy the company. I had no idea that it was even about a buyout. It could have simply been that their earnings were getting better. It could have been that they, had better revenue for sales. Maybe a change in the president of the company that was going to be positive. You never know until the news comes out. I don't ever try to predict the news in terms of knowing what the news is. I just follow market activity. So anyway, that's when the deal was announced. The market's not fair. People started trading on that a few weeks prior. And then remember, the deal started to fall apart. And he said, I'm not going to close. And he wanted to go to court. Well, that's when that started, right there. And way down here, it was like the deal's not going to happen. That's what the news media was saying. But the market activity started to tell you that there. And there's a pattern here. It's called a pennant pattern. And there's a breakdown from a pennant. So here you had a pattern, like I call this a crash reversal pattern. It's a downward trend line, builds a rising bottom, breaks up from a rising bottom with abnormal activity, stock went up. There's a pennant pattern, breaks down from a pennant, stock goes down. There's another pennant pattern right there, broke down there, stock went down some more. And then there's it's not the ideal cup and handle, but there's a little bit of a cup and handle pattern right here. That's another signal that the stock is likely to go higher. Didn't go up right away, but obviously eventually it did. There's the day when Elon said, actually, I think I will buy the company. But the market started to predict that there with a break of that pullback. So what I'm trying to demonstrate for you is that the market activity leads the news. When you watch something on, financial news channels like CNBC or Bloomberg, or read about it in the Wall Street Journal or the Globe and Mail, that's late. The market predicts, the media reacts. And if you're waiting to read about it in the public realm, you're a dinosaur. People that follow market activity like I do will sort of eat your lunch because we're always ahead. I'm always one step behind the insiders, the people that know the most. The people that bought right here, they had information. I just followed them. I have no idea why I'm buying it. I just can see that the market action was positive. And this happens over and over again. And again, at the end of the presentation tonight, we'll do a market scan. We'll try to find some examples of stocks that are showing some abnormal activity from the right pattern. Because we don't buy all abnormal activity, because not all abnormal activity is predictive. Okay. Now, the other thing is that there's a ton of uncertainty in the market. And there will always be times when a trade fails. I expect to fail 30, 35% of the time. And so what's important then is to have a methodology to manage risk, because we will not be right all of the time. And this is a hard thing for many people because it hurts to take a loss. You buy a stock and the stock goes down, and you should sell it because the market's telling you that you're wrong. But a lot of people don't sell it, and they hang in there and they hope that it turns around. I like to say that hope does not belong in the stock market, maybe in the church, maybe in the bedroom, but not in your investments. And it's key to have a plan for when to take a loss. And a big part of what I teach is risk management. Picking stocks, that's actually not that hard, but most people don't have good risk management or good process or good tools. And you have to have all of those things. I'll give you a list in a moment of the things that you have to be a good investor. And those are some of them. So here's an example of a stock that was behaving abnormally right there. Abnormal volume, abnormal price. The pattern wasn't great. It was a little bit too choppy, but it was still okay. And this didn't work. The market was perhaps speculating that something was going to happen, and then it failed. And so when it went down below this floor, I just get out and take the loss. The Stockscores had been coming up, and then they fell apart, and they stayed down for a while. And, here we are now. It's still down from that point. Okay, so I expect to lose some of the time, and that's a sign of a good investor, is being able to take the loss. All right, now the last thing I want to talk about, which is important, is when we are right, we have to let the stock work. We have to let the stock go up with us in it. And, it seems obvious, I guess, but it's amazing how many people sell too early because of greed, or because they have this fear that their winner will turn into a loser. And, your winners have to pay for your losers. Let's say you're right 7 out of 10 times. So in other words, if you make 10 investments, 10 stock trades, 70% of the time you're profitable. That means that 30% of the time you're not profitable. And your winners have to pay for those losers and make your profit overall. And so when the trend is running, we're patient, we stick with it. So on a stock like this, there's trend lines here. So you have a trend line, and then the trend line starts getting steeper. And it's only when the trend line is broken that you should sell. As long as the stock is trending higher, you stick with the trade. Now I drew those very quickly. There's a little bit more to the exit methodology than that, but that's the basic idea. As long as the trade is working, stick with it. All right, so what do I focus on when I'm trading? Well, first of all, number one thing is abnormal trading activity. That is the footprint of alpha. So stocks that beat the market tend to begin their market-beating trend with abnormal trading activity. However, not all abnormal trading activity leads to market-beating trends. And so we must also have a way to filter through the abnormal activity to find the best opportunities. And we do that with predictive chart patterns. So for example, this is a pattern called an ascending triangle. And when you get an abnormal break from an ascending triangle, the stock has a good chance of moving into an upward trend from that. So that would be one example of abnormal trading activity, yes, but also it's got the predictive pattern. And as I told you, I figured this out a long time ago. I studied thousands of charts, and I just started to see patterns that occur over and over and over again. And there's other people that have written books about this, and there's websites that have it. But some of the patterns are better than others, and a lot of the patterns require the abnormal trading activity as a key component. And that's where a lot of technical analysis books really miss the point, is they'll talk about an ascending triangle, but they don't define what makes a great ascending triangle over one that's average. And that's where some of the things that I've added to the mix in terms of statistical analysis of markets and abnormal activity, that sort of thing. Those things really take it to the next level in terms of how predictive these patterns are. Now, if I see something I like, I may not still buy it. I may like the pattern, but if it doesn't have a good reward for risk trade-off, in other words, if the potential reward for the trade doesn't compensate me adequately for the risk, then I still won't take the trade. And when we do a market scan at the end of our webinar here tonight, I'm going to talk about that as well. It's not just about, hey, here's a nice pattern, but it's also about here's a nice pattern and the reward potential is suitable for the risk we have to take. When we get a winner, we got to be patient with it. We're never trying to get in at the low or out at the high. Trying to get in at the low means you're buying stocks that are in downward trends, trying to pick the bottom. Well, you could try to do that here and here and here and here. Trying to catch a falling knife usually leads to disaster. What we want to do is buy stocks when the momentum changes. And so when they start to go up, that's when we want to be a buyer. And even later, if it's been going up for a while, we'll buy again and we'll buy again when the patterns are right. I never want to fight a downward trend. So we don't try to get in at the low, and when the stock's been going up for a while, I'm not trying to sell at the high. I'm trying to sell when the stock breaks down. And so I'm looking to sell when we get that break of the upward trend line. I'm not trying to pick the top, because if you try to pick the top, you're probably going to miss out on all kinds of gains. Trying to get 80% of what's in the middle, right? Buy here, sell, a little bit below there. Okay. So what do you need to invest in the stock market? A lot of you may be managing your money yourself now. You may be trying to retire sooner than later. And the question is, what's your plan? Do you have a trading plan? Have you developed a set of rules for when to buy, or are you going on tips? Are you going on what someone else has told you? Okay, we always want to make sure that we have a good set of rules for when to buy. And so I've developed a number of different strategies. I'll introduce you to those tonight for when to buy. You also need strategies for when to sell. And there's methodologies for that. I have 2 or 3 different approaches for selling. Not trying to get out at the high, but trying to get most of the upward move. We need risk management methods. How do you know how many shares to buy? That's a big part of your approach to the market and really often overlooked. What kind of tools are you using to identify opportunities? I'll show you my tools. Tools are how I get an edge, because I have some tools that aren't available to most people, and that gives us an advantage. You need process. You don't want to spend hours and hours looking for opportunities. You want to do it quickly, and you want to make sure you don't miss anything. And I built a great tool to do that allows me to go through the entire Canadian market, the entire US stock market in a very short amount of time. And again, we'll do that together tonight. And then there's the psychological side. Confidence is a big part. And so one thing that I can give my students is that sort of hand-holding and the experience that I have from doing this for a long time to help give them the confidence that they're doing it right. And so, part of how I teach is I will actually run a bunch of extra lessons where we do market scans together to help you learn, to help you gain confidence. And then let's say you took my course and 6 months later, you're feeling a little lost. I don't teach a lot of people, so you can email me and I'll try to get you on track with understanding either if you're doing something wrong or if you're lacking confidence in the chart patterns. I can help a lot with that as well. Discipline, that's something you have to bring. You have to, do the work. You have to do the market scans, and you have to plan to lose. Make sure that you don't take big losses. You have to let your profits run. I'll teach you all the reasons why those things are important. I'll show you how to do it. But if you don't do it, then you're lacking discipline, and that can be hard on performance. In a hot market, you can get away with it. You can get away without a lot of discipline. But when the markets are normal, then discipline becomes quite important. So what I bring to you, if for those of you that are interested in taking it to the next level, is trader training programs for investors, for day traders, for swing traders, for long-term investors, where you're really leveraging what I've learned from over 30 years of doing this. And again, at the end of the night, I'll sort of walk you through that whole process. So ultimately, we want to buy stocks when they're going up, and we want to think about reward for risk, and we want to get out of them when the trend is over. And so if we were to look at the chart of Microsoft, for example, there was a good entry point there. There's a good entry point here, maybe here. And then ultimately that upward trend line was broken in there from a falling top. And so January, early February, market told us get out. So, getting in here, there was actually buy signals longer ago as well, but I'll just focus on the ones that are on this chart. So, buy here, sell there. You're not getting the whole move. You're not getting from here to here, but you're getting, 80% of it. And that's what we're trying to do. Again, notice when the stock is going up, the stock scores are pretty good all the way up into here. And then they fall off right there. And that's because the sellers take control of the market. I created the algorithm that plots these lines, and it's based on the chart pattern. So what I did when I created the stock scores is came up with all of the things that I look at when I look at a stock chart, and I gave them points. So a real simple thing is, are there rising bottoms on the chart? Are the buyers in control? Well, that gets a positive number of points. Whereas if there's falling tops on the chart, that takes away points. If there's breakouts through resistance, that gets points added. If there's strong volume supporting the breakout, that gets even more points. So all of these things come together to create this scoring model. And in the course material, I teach how to use those. We do not use the Stockscores indicators for short-term trading. They're not meant for that. They were built for investing. So if you're looking to hold stocks for weeks or months or even years, the Stockscores indicators are really valuable. But when we're day trading, we totally ignore the Stockscores. All right, so how long does it take to do this? Well, if you are applying these 4 strategies, it takes about 15 minutes a day. You don't have to do it every day. I do it every day, but lots of people will do it when they have time. If you don't do it, then you don't find anything. We're going to do this at the end of the night tonight. If you don't want to put in that much time, then you can devote 15 minutes a week and focus on these 2 strategies. The difference here is we're looking at the daily interval, and with these, we're looking at the weekly interval. So when we go back to this chart, for example, this is the weekly interval. So running the Stockscores simple weekly strategy, if you ran it on that week, it was a buy point. And there's a process that you use to find it. And so that would be the process. Now, if you were trading off of the daily interval, then you would have to be looking at the daily chart. This is the weekly chart. And the daily chart may have given an entry point right here on the daily chart for a trade that lasted 3 months or 2.5 months. Okay. So the amount of time you put in really comes down to how much time you have, what your interests are. I love the stock market. I stare at the screen 6 hours a day, and I'm always happy to do that. It's my hobby first and foremost. Not everybody's into looking at the stock market like that closely. And so then you choose a different approach. And most of my sort of investor students will do this approach where they're doing this strategy, and this one. Bottom fishing we're doing right now because the market's coming out of a downward trend. If the market's been trending higher, we don't really do that one because that's the strategy for this market where you're seeing stocks turning around after being in downward trends for months. And there's a great opportunity because of that. Stocks are on sale and they're starting to move up again. And most people will miss out on the turnaround because they're frustrated with how the market's been. And I encourage you, whether you buy into my tools and education or not, don't turn your back on the market right now. It's starting to show signs. It's not conclusive yet, and I'll explain why it may be tonight at the end there, but it is getting a lot better. Okay, so how do I find opportunities? I have a tool called the Stockscores Market Scan, which we're going to use tonight. It allows me to scan the entire North American stock market in minutes, and it's got all these filters that are unique to my approach. So again, I scratched my own itch. I needed tools to do the approach that I developed 25 years ago, and they weren't available. They're still really not out there, so I built my own. And those are available to my students. So let's jump into the Stockscores website. I'll just show you the market scan quickly. So you've got all these filters available. You don't have to worry about what all these do just yet, but for instance, if I wanted to look at all Canadian markets, I wanted to see the stocks that have a sentiment score greater than 60 that moved up at least 3% today and traded at least 500 times. Yeah, I just built a little scan. I can run that scan. There were 25 stocks that did that. See how fast that was? It was like almost instant. And then I can view those charts one at a time, looking to see if they have the right kind of chart pattern. And so here is a pattern called a cup and handle pattern. There's a cup here, the handle's right there, and you're breaking out. It's pretty good. Lacks volume. I'd like to see the volume a little stronger. But notice the stock scores are turning around. So that's pretty good. And you can see the sentiment stock score is 64. I could look at that on a weekly time frame as well. And I can see on the weekly time frame, it came back to the long-term upward trend line, and about 5 weeks ago, it bounced off of it. This is an energy company. A lot of oil and gas stocks in Canada look like this right now. That's got pretty good potential to come up into here. Probably get stuck at $1.70. So the reward for risk isn't ideal, but it does appear to be a stock more likely to go higher than lower. So that's sort of if you want to create your own market scan, but you don't have to know how to use the, set up the scan, because you can use my presets. So if you wanted to look for opportunities on the US market, I could run the abnormal break scan and run that. And it found 50. And again, I go through the charts one at a time or 10 at a time. So last time I was looking at the charts, they were really big, and I was looking at them one at a time. Once I get good at reading charts, with some practice, you can get good at this. You can go through the charts really quick. And then you can say, oh, okay, NRXP, trading a little bit of abnormal price action, breaking from sideways trading. If you want to look at that more closely, then you just go up to the top here and go NRXP, enter. And now I can see that there is a pattern here called an ascending triangle, and we're breaking out of that. Hard to tell if there's any volume because we've got this 100 million share day back here. There was probably a financing there. So I can zoom in a little bit, look at a 1 month chart, and I can see that it traded a little more volume today. So something's going on. Stock was pretty boring. And then late today, it came alive. What does that tell you? I mean, there's something happening there. So I think that's interesting. You want to keep an eye on that stock tomorrow. How did I find it? I just ran a market scan. It took me, 5 seconds? Abnormal breaks US, run the market scan, click on go, cycle through the charts until I see the right pattern. I can teach you what the pattern is, take some practice, and then I see that, I say, yep, that's good. This, no. This one, no. This one was, not anymore. Next page. So it's just a process of knowing what to look for. We're going to do this together at the end of the night. Okay, and I think there's some other ones that we might find as well. So that's the market scan tool. Now, all of that's great. We've talked about the importance of all these things. We've shown you a tool, there's a process, but you don't know what to look for, then you're kind of lost, right? So for that, I developed an education center. It's all online, so I can click on Education Center, and I can watch videos and lessons on how to do all this stuff. So the Getting Started area in the Education Center is free. So if you want to learn about the stock scores and how they work, there's a video right there called the Stock Scores Indicators. So you can watch the video. If you want to learn the basics of reading a chart pattern, there is a lesson here called the 6 Elements of Chart Patterns. There's a written lesson, there's a video, there's an assignment, and there's a test. For this, you have to be a member. Okay, Getting Started is free. Foundation, Investor, Active Trader, those require that you're a member. If you want to know what that abnormal break strategy is all about, so here it is, abnormal breaks. There's a lesson explaining it, and there's a video showing you how it works. And if I want, I can click on the lesson and I can read the lesson. I can watch the video. You can do this from your phone, an iPad, computer, whatever. And it's playing some music in my ears right now. I'm going to turn that off. But here I am explaining the concept and how this particular strategy works. And they're all connected. All right. So the Education Center has the basics, then it has the theory, then it has the strategies. And it not only does it have the entry strategies, but it also has the exit strategy. So I can learn the abnormal break strategy. Right, there it is. And then I can go to the market scan and I can choose the abnormal break strategy. And I've got it separated between Canada and the US. Okay, so there are things on Stockscores that are free. If you want to pull up the chart of any stock, I can pull up Microsoft, that's free. If you want to look at charts all day long, it doesn't cost anything. If you want to use the market scan, you have to be a member of Stockscores. If you want to use a market scan with the investor scans, you have to be an investor member. If you want to do the active trader scans, you have to be an active trader member. And what we're going to talk about on Saturday is all of the details around being a member. I don't want to spend too much time on that tonight, but just for now, understand that the Education Center gives you all of the knowledge. So it gives you the theory, that's the foundation. But if you want to learn the strategies, you have to have the investor access. And if you want to learn day trading and swing trading, you have to have active trader access. And again, we'll do this stuff on Thursday. Tonight we're doing investor. Right? So in order to be a member, if you want to be an investor member, let's say you want to manage your own money or retirement, or you don't want to spend a lot of time at it, the investor course is the right one for you. That'll give you access to the foundation theory lessons, gives you access to the investor strategies, gives you access to the market scans for investors. You get email support from me, and you get 6 months access to the tool, which is the market scan tool, which you can then renew at $300 a year. You cannot access the market scan unless you have done the investor course. And this goes back to what I was saying at the top of the lesson tonight. I don't want to have a lot of customers. I don't want to have thousands of people using these things, because I use them to, make money. And if there's too many people using them, they just don't work well anymore. They won't. If everybody does the same thing, it loses its value. So I'm quite happy to teach 100 new people every year and just have a nice little quiet club of my members. And you'll never see me do a lot of marketing or anything, because I don't need to. I can teach 100 people a year quite easily, and that's my goal. And that keeps the website going. As I said, makes it so I don't have to pull a lot of money out of the market. I can just sort of let my trading account grow, and without getting extractions from me or withdrawals. That's my whole goal behind Stockscores. I like to help people. I've been doing this for a long time. It gives me a lot of satisfaction to help other people learn this stuff. But I can only handle so many. I don't have a bunch of people answering questions for me. I answer all the questions. I have people that run the website for me, because I'm not that much of a computer geek. But in terms of, who teaches and who answers questions about the market, that's all me. And I think that that's important, because I'm the one with the experience. The lessons are all there, they're all recorded and everything else. But when I teach a class, it's me doing that. Yeah, the active trader course, we won't talk a lot about tonight, because that is Thursday. But it's basically everything in the investor course, but you also get the active trader strategies and access to some of the real-time indicators that I've created for active trading. And we have a service called Active Live. I'll talk about all these things on Thursday. Okay, so that's for day traders and swing traders. And again, I'll come back to that Thursday. Active Live is a real-time live webinar that I run every day. Starts at market open, ends at market close. And I've got algorithms that are running in real time, identifying stocks that are moving quickly. And we find these stocks before most people because we have powerful computers and algorithms that find it. So again, this is my edge. I make this edge available to my active trader students and only to active trader members. Again, we'll go through that more on Thursday, so I'll jump through it really quick. So live training is something that I do twice a year, most years. And I will be doing another round of live training where I basically teach you myself in webinars like this. And that starts in November. We will do the theory, the foundation stuff on Monday, November 14th and Tuesday, November 15th. So just like you've logged on tonight, you will be able to log on those days. You'll get a special link and I will teach theory. So we'll do an hour and a half each night. And it's just hand holding. Everything that I teach is already in videos and written lessons, but I find people learn it quicker when I teach them. So I used to teach this in universities over the course of a weekend. Now I do it online because technology allows that. And so that's what we'll do Monday and Tuesday. And then Wednesday, Thursday, Friday of that week, I will do market scans with you. We're going to do a market scan in just a moment. But those days I will run market scans. We'll just apply what we've learned. And so within the week, you'll have a good understanding of how this all works. It still takes practice like anything, but you'll be ready to go. Now, for those that do active trading, if you want to be a day trader or a swing trader, we have another service for that. It's called Active Live. And you get one free month with the course. You can use it any month you want. You can wait till January if you want. You can use it in November. It's totally up to you. I would recommend you probably wait until after you've done the course material. So that would be December at the earliest. And important, I know a lot of you have kids and you have things to do in the evenings. All of these classes are recorded. And so everyone is recorded. And you'll have a video that you can go back to and watch 100 times if you want. So if you can't make all of those times, or you, obviously if you want to go through it more than once, it's all available to be watched later. All right. So there is a special offer that I do when I teach. If you register for the course by November 10th, you get all of these bonus materials for free. So the overview class on Monday and Tuesday in a couple of weeks, that's included. The market scanning, that's included. If you take the active trader course, you get a month of active live. Mentorship, we'll talk about that on Saturday. All right, so what I want to do now, well, here's the pricing. We'll always want to know what the price is. This is all Canadian dollars. I know we have people here from all over the world, so you just have to do the conversion into your currency. We charge you in Canadian. So it's $2,495 Canadian. Canadians have to pay GST as well. That's the tax here in Canada. And anyway, you can see the prices there. Prices will be increased January 1st of next year. So I haven't raised the prices for this course since, gosh, at least 10 years, probably even been longer. And I'm going to be raising the prices at the start of next year. So if you don't want to pay more, now's the best time to do it, because you're going to get the online extra training from me, and you're going to get ahead of the price jump that'll occur January 1st, 2023. Okay, so how do you register for the course? You go to stockscores.com/learn. Basically, you go to the website, go to Trader Training, learn how to trade. There's a video here on the Active Trader course. There's a video here on the Investor course, and you can just buy it right online. You get instant access. So as soon as you buy it, you'll have access to the market scan tool. You'll have access to the education center. It all is automated. So you'll be able to get up and running right away. I think it's a good idea to purchase well before we start the classes in 2 weeks. You'll just be able to study more and get more out of it. I mean, you don't have to. I have people that buy the course, 4 days beforehand, but you will get more out of it if you can do some of the work in advance. So if you're thinking about doing this, I would act sooner than later, just because you'll get access to the material that much quicker. So here's some, I've got hundreds of things like this. These are just a few that I thought I would show. I'll leave that up for a moment. But what I'm going to do is just start a poll. I really don't like to bug people, so I'm going to put up this poll. If you want a follow-up email with more information about the course. You just have to say what your interest is here. If you don't want to be bugged, then say no. And I'll send you a follow-up email with a little more information. Just let me know what course you're interested in, and we'll get that out to you. Okay, I'll leave that up for a moment, and then I've got a few questions here that I'm going to try to answer. So what is consisted of sentiment score? So there's a video in the Getting Started area of the Education Center that explains what the stock scores are all about, and it does it graphically. So I just get you to go take a look at that. So go into the Education Center. It's one of the free videos on the stock score. Sometimes I have entered certain stocks into stock scores. They come up without a score. Is this because it is too small? Now, the reason that happens usually is because they haven't traded for at least 200 days. So we need 200 days of trading data in order to calculate a score. So if ever you see a stock without a score, that's probably why. You ever use the stock scores to find short opportunities? Yeah, but not in the way you think. Like being below 60 is not the way you do that. Usually it has to be lower. But actually, sometimes there's some shorting strategies where I'll short a stock even though it has a high stock score because it's just gone up too much. There's a lot of questions here. I'm just trying to quickly read. I'm going to take this poll down in just a second, and then we'll do a market scan together. So I think I just answered the question about how we scan the market. I've shown that. So I'm going to close this now. Thanks for answering. And again, we'll have some follow-up if you want it. All right. So we've done the poll. I've done a few questions, but now what I'm going to do is, so just this question, the volatility is very high for the last few months. How can the charts be correct in that situation? Well, they're correct because they're showing people's fear. So the fact that stocks have gone down a lot is because people are pessimistic and fearful. And the chart shows that. And the chart shows us to stay out of those stocks. You know, if I just jump back to Stockscores and I pull up, say, Meta, MTA, formerly Facebook, and let's make this a one-year chart. You know, this stock, I'm going to make this go back even a little farther. This stock broke, this stock broke its upward trend back here and then broke down from a falling top right here and did it again right here. So the market told you to sell the stock once, twice, 3 times. You know, the last one was at $300. The first one was at $350. Today it's at 100. I'll teach you how to stay out of these things. It's not hard. But anyone that holds these stocks through that downward trend is suffering unnecessarily. You know, I am almost entirely in cash right now, and I've been that way for most of the year. I mean, I day trade, but in terms of longer term stuff, it's better to be defensive. And now the market's starting to turn. Let's take a look at the S&P 500, and I'll show you why. And some of you may already know this because I do it every week in my weekly YouTube video. If you're not a member of my YouTube channel, make sure you go to YouTube, do a search for Stockscores, and subscribe to the channel. I put up a free video every week that tells you whether to be good in the market or not. Anyway, here's the downward trend line. We got oversold in the summer. We came back. We've been oversold recently, and we're coming back. We're probably going to get up to the trend line in the next couple of weeks. And then the question is, will we be able to break it or not? So the market's getting better, but it still needs to break this downward trend line. So that's the longer term view. Now the short term view is quite different. So if you're more of a day trader or a swing trader, you can see here that the buyers are in control. And so the market's been pretty good, not great, but pretty good for short-term trading the last 2 weeks. And that's because we've switched from sellers being in control. And I talked about this in Saturday's webinar. Sellers in control, now buyers are in control. And today was a slow day, but yesterday and the day before, Friday, they were both fairly good days for day trading. All right, well, let's do a market scan now. And let's see what we find. We'll do abnormal breaks. It's kind of the one I do most days. We'll do it on Canada first. So you can see I've selected it. I can do this because I'm a member, obviously. You have to be an investor member to pull this one up. I run the scan, found 8 stocks, And now I'm going to view those 8 stocks one chart at a time to see if they have the right pattern. Okay, so I will go through and explain what I see. Let's do this one. So here's a stock that the sellers were in control of, and now the buyers have taken control. This is a pattern called a rectangle consolidation. Good. It needs to break through this ceiling here. See how it keeps hitting this ceiling? It's touching it today. It hasn't quite broken through. You can see there's a little bit of volume coming in, not exceptional. See, my stock scores are getting better, but they're not quite above 60 yet. So this is a good stock, but not a great stock. I'd like to see it break out. I'd like to see it break out through 360 roughly and get a little more volume. And if it can do that, I think it actually could be quite a good one. So keep a close eye on this. We're seeing mining stocks improve. That's one of those sectors that's improving. The precious metals are improving. Still not great, but they are improving. Right? Go to the next one. Okay, similar. Also a mining company, Hudbay Minerals. Very similar pattern. Okay, but still needs to break out of that sideways range. Next one. Here's another mining company. So you get a theme here, right? The mining stocks are starting to turn. There is resistance. We broke through resistance today, but volume was light. Okay, it's not abnormal volume. So if I was to rate this out of 10, I'd give it a 6 out of 10, which means I think it has a 60% chance of going higher. Okay, next one. Another mining company. This one not quite as good a chart. Resource company coming into resistance, not quite ideal. This is an oil company, and you can see that its long-term trend is broken there. So it actually broke down and it's making a little bounce back, but I wouldn't actually touch this one right now. If you're in it, if you're in this stock, I would say it's okay to hold. Let me just draw that line better because I didn't really do this properly. There. I would just be a little bit cautious. I would like to see it build a rising bottom first because it's coming off of a low. Again, if you're in it, hold, but I wouldn't buy it. Okay, and we've got one more. This is not too bad. So you can see we've switched from seller control to buyer control. Got rising bottoms. We're breaking higher. We lack volume, so there's no abnormal volume there. So it's pretty good. And then there's going to be some resistance here. So the reward for risk doesn't make sense. Now, if you take my course and practice, you'll be able to understand exactly what I meant. Just takes a little bit of practice. Let's do that scan on the US market because I know there was some there. We actually already saw one of them. So let's run this on the US. So 50 stocks to look at. So because there's a few more to look at, 50, I'm going to use the gallery viewer. The gallery viewer allows me to look at 10 charts per page. And so I can go through them a little quicker. Okay, so I will pause when I see something worth discussing. And, you know, the ones that I'm zipping past here, they're not quite good enough. But here's NRXP, which we talked about already. It's got some abnormal price action, breaking out. Liquidity is how often a stock trades. It's a little bit light, only traded about 1,000 times today, which is not very much for a US stock. So I would give this one a 6.5 out of 10. So I think it's got a 65% chance of going up. Okay, and I do this every day. Usually I do this process about an hour before the close. You can start doing this process about 45 minutes after the market opens. You can do it in the evening, but I like to do it about an hour before the market closes. All right, here is an ascending triangle, strong volume, price breaking out. It's switched from falling tops to rising bottoms. So remember I said that there's a strategy I use called a bottom fishing strategy. This stock meets the requirements of the bottom fishing strategy. It's broken the downward trend, it's built a rising bottom, and now it's breaking from a rising bottom. I would give this one a 7 out of 10. So I think it has a 70% chance of going higher in the weeks ahead. All right, now how do I know those percentages and how do I know that that one's worth doing but not this one? That's all stuff that I'll teach you in the course material. Pitney Bowes, PBI. So downward trend line broken, build of a rising bottom, break from a rising bottom. This is a little shorter than the last one we looked at. The volume isn't quite as strong, so I'll give that a 6.5 out of 10. 65% chance of going higher. One other issue with this one is reward for risk. Your risk is entry here with a stop loss about there, and you're going to find some resistance right there, which limits your upside to about 1-to-1. And I like to have at least 2-to-1. So it's not quite good enough in that regard. That's why I give it a little lower score. Okay, I'm going to zip through these and I'll stop if there's anything that I think is good enough to consider. And notice, obviously I'm going through these quite quickly because I don't want this to take all night. But when you first start doing this, what will take me 2 minutes tonight will probably take you 15 minutes. But as you practice and get better at it, you'll be able to do it quite quickly. And within a few months, you can probably do it almost as fast as I am. I've got 30 years of practice. Like anything, you want to be good at something, you just have to do lots of practice. PSMT, not bad. I give that a 6. Now, right now, we're seeing a lot of the same pattern because of the way the market is. In a different market condition, the patterns that show up are going to be quite different. And, you have to sort of learn a dozen different patterns. In the Education Center, under Foundation, there is a chapter or a lesson called Predictive Chart Patterns right there. And that's where I teach what the patterns are that are predictive. And that's all obviously part of the course material. All right, so that was a quick scan. We're going to do those that second week of November. And obviously you have to be a member. If you've taken the Stockscores course, let's say you took the course 4 years ago and you just want to do a refresher, that's another option. If you go to Trader Training, upcoming events, and go down a little bit, right there, Foundation Overview and Market Scanning. So if you are already a Stockscores member and you just want to do a repeat, a refresher, that's $195. And so you can register for that. If you buy the course now, you get that for free. It's included, provided you purchase before November the 10th. So that's a Thursday, I believe. Thursday, November 10th at midnight. All right. So I've gone through a lot. How's my time here? I'm a little over time, but hopefully you enjoyed it. I hope that you learned something. It's really my goal to educate investors. So whether you take my courses or become members of Stockscores or not, what's important to me is that you learn something. Part of being here tonight for this webinar is that you get a free copy of my book, an electronic copy. So I will be emailing that to you soon. I will also email you a link to the video. If you are watching tonight's webinar as a video, make sure you register for Thursday or for Saturday, and I will then be able to email you the e-copy of my book. It's called The Mindless Investor. And it's got great information. It's a real book. I used to sell hard copies of it, but they're all sold out now. So it's the only way to get it now is in the ebook. And we save some trees, which is good as well. And again, if you would like to register for the course, you can do that anytime. Here's the address, or you can just go to the Trader Training area on Stockscores. And to get that free stuff before Thursday, November 10th, you register at 11 p.m. anytime between now and then, and you'll get access to the course material, and you'll also get access to the free bonus stuff. All right. So I haven't seen any questions come in. Oh, and is there an ideal time to run the scans at 7 a.m. or just before close? I tend to run them an hour before the close for the scans that I showed you tonight. But there's other things that we'll do. We'll use the scanner an hour after the open. Just depends on the strategy, and it's always varying. So, all right. So we did the search for opportunities. There's my email address. If you have any questions, you can hit me up there. I really hope everyone subscribes to the YouTube channel, and because there's lots of free videos on there as well. I want to thank you all for joining me tonight, and look forward to seeing you on Thursday. And again, if you want to register for the Thursday webinar, just go to Trader Training, upcoming events, go down to the day trading for part or full time, and for part or full time income. And then you can register right there. And also Saturday, I'll go into more detail about what's in the course and all the different things that come with membership. And that'll be on Saturday at 9 a.m. Pacific time. All right, so leave it at that. Hope you enjoyed it. Thank you, and we'll see you Thursday. Bye for now.